Good evening, all. This is Share with ShogunTrading.com. This is the third video in our series about going short on the market. Basically, the reason why I'm doing this third and last video is because I want to show the regular investors, the regular trader, how to protect themselves against market downturns as we just had. This is the worst economic decline since the Great Depression, and you've heard that for the past couple of years probably. And I mean, now it's actually reflected in the stock market, and of course you want to protect yourself against that. S&P 500 went from the 1500 level all the way down to 676. I'll do the same thing on the monthly chart, and you can see how we came down. Now, buy and hold as a strategy is basically dead. The reason why is because we are now below the levels of 97, which means if you bought any kind of stock since 97, you are below your purchase price, which is not what you want to be for obvious reasons. Where are we going? I won't get into that right now. But anyway, let's talk about the market itself. The S&P 500 can be traded. You can buy the S&P 500. You can do something that's called the spiders. Spiders is an ETF. It's an exchange-traded fund. Basically, it's about 1 to 10 ratio. Every 10 points that S&P 500 goes up, this one goes up $1. It's basically the same levels. So you can also go short on the spiders. You can go short when you see this kind of a market downturn. There's a double top, there's a lower top, there's a lower top, and you can go short if you want to. You can buy options on this one. That's like we talked before. You can buy options on the spiders. You can buy puts, for example. And you can do very, very well as either as a trade or as protection. For example, you can buy puts on the spiders while you're going long with the rest of your portfolio, and therefore if the stock market dives, your puts become very profitable and you're doing well. Basically very cheap insurance against market downturns. Let me go on daily charts. There's S&P 500. You can see how it broke to 80. I'm sorry, this is the spiders, how it broke to 80 and came down. Now, there's also the QQQQ, which is the same thing, only for the NDX, the NASDAQ 100. So if you want to be more specialized in the tech stocks, that's a good one. You have the diamonds, which are the Dow Jones Industrial Average, and this one is a great one to trade as well. And then you have a bunch of other ones that are great. There's some of the S&P 500 Select, for example. This is the S&P 500 Home Builders. And I'll show you a monthly chart on this one. Actually, let's do a weekly chart. And you can see how this one has been diving and diving and diving. And we actually caught a very, very nice short on this one for quite a while. So if you think that your home prices are going to go down, you short the home builders. And you do pretty well. Protect yourself against that. You can do the same thing with oil. And you can see when oil was all the way at the high, if you go short on USO, you would have been able to ride it all the way down. Or on the way back, on the way up, USO is a good one to buy, and you take it all the way up. I mean, these are tremendous amount of profits from 50 to 120. That's not too bad at all, and these are all exchange traded funds. Go back to daily. Okay, some more that I want to show you. XLF is basically the financials. S&P 500. Not 500, S&P Select Financial Spider Fund, which is a great one to go short. You can see that it worked out extremely well. Now I want to show you some of the more advanced ones. These are the ones I've showed you so far, basically 1 to 1. They are 1 to 10 or 1 to 1, but they're not very leveraged. Here's some that are more leveraged. SMN. This one's an ultra short basic materials ProShares. ProShares is a company out there that puts out all these ETFs, exchange traded funds. They're the same thing as mutual funds, only to trade on the exchange. A beautiful thing. And we used SMN ourselves for trading quite a bit. For example, a few days ago, we went from 51 all the way up to 57 in the same day. It was a 15% day. Was really nice. Here's SDS. This is the ultra short S&P 500 ProShares. This one actually follows S&P 500, and this was our buy recommendation was over here at 87. This is something we recommended to our traders, to our subscribers. It went from 87 all the way up to 116. That's a beautiful thing. While the S&P 500 goes down, this one goes up because it's an ultra short. It's a double short. So here's S&P 500 breaking on 211, and you can see how this one at 211 right here. Also broke out to the upside and worked out extremely well. Here's exactly the opposite, and a lot of these trade in pairs. Instead of ultra short, this one is just ultra. You can see Pro Shares Ultra S&P 500 right here. And this one did exactly the opposite on the short side. So when the market turns around and you think there's a bottom, this one would be a good one to buy, and you can ride it all the way back up. Just imagine from 14, if it goes all the way up to 50, you'll look pretty good. Here's a couple on the S&P, on the Nasdaq 100, on the QQQQ. This is an ultra short that we did very well from 63.58 up to 70, and there's the exact opposite, the QLD, which is on the long side, ultra versus ultra short. Here's SKF. SKF has got a big controversy around it right now because of how they're supposedly beating up the financials. It's not that the financials are full of hot air. It's the fact that SKF is beating up the financials. As you can see, SKF is not really moving all that much on the downside. On the long side, this one is also an ultra short financials, by the way, and I don't think it should be banned. Here's a couple more. There's FOZ. That's a financial bear. This one's 3 times. So this one is not just an ultra short. It's triple. And here's the opposite of it, FUS, which is the bull triple. OIH is very interesting. OIH is Oil Silvers Holders. It's another one that we trade. We day trade this one actually quite a bit. And a couple more. DUG, which is an ultra short oil and gas, and alongside ultra oil and gas Pro Shares, which if the oil and gas industry turn around, this one might be a good one to do. Here's another one that's very interesting. That's gold, GLD, and when gold was at 1,000, this one was basically close to 100. It basically mimics the gold itself, and instead of buying physical gold or buying the commodity gold, you can actually just buy GLD, which is a beautiful thing. So if gold breaks 1,000, this one will break 100, and you will be doing pretty well with this one. Notice that it bounced off the 100 to the downside. They say, by the way, that they owned a tremendous amount of physical gold. So you're basically buying physical gold. Anyway, ETFs are a great way to trade the market. Trade the market in both directions, on the long side and on the short side. I do encourage you to protect yourself. I do encourage you to take control of your portfolio. Being down 50% on an account, most mutual funds are down 50%. It doesn't do anyone any good to hold when it goes against you 50%. I'd much rather take the ultra short and actually be up quite a bit. These are actual trades that we recommended to our clients. 87 up to 115. I'm a lot more comfortable with that than being down 50%. Fuzz is one that we day trade on a daily basis because it works so well with the financials. If financials are going down, I want to take advantage of that and do well with that. Anyway, I hope that this has helped you in your investing, in your trading. These ETFs can be traded on a daily basis as day trading or swing trading. You do not have to worry about the uptick rule. You do not have to worry about availability of shorts. You do not have to worry about whether you pick the right stock in the sector. These are already diversified, which gives you a nice sector-wide trade. So they work out extremely well. Anyway, I hope you enjoyed the series. I hope you enjoy these videos. I hope it helps you out. Have a great night. Take care.